Well, I'm anxious to see how the trade is opening up this morning, and so is Dewey Strickler. He's with AgWatch Market Advisors in Franklin, Kentucky, and he joins us by phone right now. Dewey, thank you so much for helping us start out the brand new trading week and month and quarter here as we get into the month of April. A whole lot to look forward to now with a wide open, clean slate moving into this month. And Dewey, what do you say we take a look at our opening prices here on the grains? Let's take a look at this corn market this morning. Of course, we had those major reports on Friday. Now that they are behind us, we have May corn trading 4 1/4 higher this morning at 368 1/2 per bushel. That's just 2 ticks from our high of the day so far. December up 4 3/4 at 393. Only 1 tick off of its high from the early morning and overnight trade. Soybean trade, remember we sold off sharply last Friday. Well, now we're about 3/4 cent higher. The May contract trading at 946 3/4. November now 2 higher at 956. On the wheat trade, in the Chicago wheat, we have May 5 1/2 higher at 432. July 5 1/2 higher at 444 1/2 per bushel. Kansas City wheat, we have the May contract now up 3 at 423 1/2. We have July 2 3/4 higher at 436 1/2. Minneapolis wheat, we have the May contract now 1/4 cent lower at 534, and July absolutely flat, unchanged at 542 1/4. Cotton market this morning, we have the July contract 33 points higher again at 78.92 cents per pound. It got as high as 79 1/4 already this morning. Dewey, let's take a look at this situation here. We have relatively sharp gains in the corn and the wheat trade. You and I were talking before we came on the air. There's been a little bit of talk and buzz here over the weekend about some huge short positions, especially in the wheat by these large commodity funds. That could be kind of dangerous, couldn't it?
Yeah, it very well could. And you got some pretty decent short positions in corn, too. When you look at the corn, the funds are short 745 million bushels, and this is the biggest short they've had since mid-October. You got the report out of the way. We got the growing season to get through, and we're getting off to a little bit of slow start in planting because of wet conditions in areas of the Midwest. But when you do look at wheat, the funds, Marlin, are short 790 million bushels. That's only 35 million bushels shy of the target or the record that they had in October. This could be a pretty explosive situation in the wheat, because in wheat, guess what? In April and May, that's when your biggest weather concerns come in.
So what kind of weather concerns would you be concerned about?
Well, it's in April. I have seen late freezes. Anybody that raises wheat has certainly been a victim of it.
And it wouldn't be necessarily the case only here in the U.S. either, would it?
No, that's exactly right. I mean, it could be really, when you look at Europe, it could be in the Baltic or Black Sea region over in the eastern part of Europe. Yes, it could be just about any of those locations.
And now, based on the prospective plantings report that we got last Friday, when you're looking at the overall U.S. wheat acreage this year, that is something like the lowest in what, about 100 years, thereabouts?
Yeah, it's the lowest that I've ever seen. I don't think I was around 100 years ago, so I can't comment about that. But it's the lowest number that we've ever seen.
So that is possibly adding another brick to the bull's wagon there for down the road. We'll have to wait and see if anything does trigger that. Dewey, what I want to do is pause for a short break, and I want to bring you back and discuss what took place in our livestock trade last week and heading into today. It could be really interesting. Lots of stuff going on there. Our guest, Dewey Strickler, will have more right after this break. Interesting that the national sheep market last week was said to be steady to as much as $7 higher, depending on which region you were looking at. Let's go back to our conversation with Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. He's on the phone right now. And Dewey, as we take a look at our livestock trade, let's go ahead and pull up our futures on the cattle and the hogs. Remember, as we wrapped up Friday, we were mixed in the live cattle trade. The feeder cattle trade, we had the nearby contracts over $1 higher, and the lean hog trade was mainly lower. So here are the opening trades. April live cattle now down 27 this morning at 119.68. And that's very close to our low of the day so far. We're about 3 ticks from that. June live cattle down 29 at 110. 58. So that's about 80 cents off our earlier high. Now that would have been about a $0.50 higher at that point. August live cattle down 35 at 106.40. So already we've been on both sides of unchanged here in the live cattle trade. The feeder cattle, that's the one that took the lead on Friday. It was over $1 higher on the nearbys. Well, they're giving it back today. April feeders down 95 at 133 even per hundredweight. That's already $1.25 off of our earlier high of the day, and it's now in the low of the day. So $1 turnaround, or $1.25 turnaround already in the feeder cattle market in the first 20 minutes of trade. The May contract down $1.12 at 131.58, and the August down $1.25 at 132.50. Dewey, we were talking earlier in our broadcast about the fact that we had cash cattle trade that was all over the board on Friday. It was hard to tell if it was higher or lower, depends on what you compared it to, but boy, you can't deny that the wholesale beef trade has really fallen on hard times the last week or so.
Yeah, that's right. And, of course, that comes with the fact that we're looking at the production expected to increase here in the second quarter. And the trade is looking for lower cash again this week. But we still have to keep in mind that the futures are at a considerable discount to cash, which will offer overall support here.
Right now, we are looking at in the beef cutout values that came out Friday afternoon from USDA that they were down sharply. In fact, we had select cuts Friday afternoon down over $4. Select cuts priced at $2.04 even per hundredweight. That was down $4.05 in value, and the choice cuts were down $1.09 at $214.12. So they really widened out that spread on Friday afternoon, widened it out by $3 or so. As we take a look at our lean hog trade here in the early going, as we start out the month of April, we have April lean hogs down a couple of pennies at 65.65, and now you have the May contract down a nickel at 69.80. And June lean hogs down 25 at 73.60. Where do we stand here in the technical picture on the chart patterns for the lean hogs, Dewey?
Looks like, Marlon, we're not going to go much of anywhere. We've had a pretty good collapse in values since we put our contract highs in on the June contract, and I would just look for a big, broad trading range. I don't know that we'll go much below the low we made last week at 72.25. We possibly might, but I doubt if we go very far below it.
Do you think, for the most part, all the traders have rolled out of the April contracts now and into other months?
I think they pretty well have, yes.
Okay, so we'll have to keep an eye on that. Dewey, you might remind our listeners about this university that you have in case they can still sign up for that.
Yes, I'm going to have some positions. They're going to be open, or slots open here in May. And AgWatch U, Marlon, what it is, that is a 4-month curriculum in which we teach you the skill sets to proficiently market your own grain and to take the emotion out of marketing. And for those that are interested, you go to the website agwatch.biz and click on AgWatch Grain Market University.
All right. Thanks for the heads up on that. Appreciate it. Hopefully folks will check that out. Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. So a little pressure on the cattle market to start things out so far. The grain markets, some of the grains looking fairly strong today.
All right. Time will tell, I guess. Thank you very much, Marlon.